And sorry, just got that note. And it's a way to direct who receives your assets when you pass away. So your estate plan can include a number of things. It can include wills, single wills, multiple wills. It can include powers of attorney for property and personal care, and it can include various different types of trusts. So before we go on to the rest of the presentation, which it's going to focus primarily on wills because we don't have time to cover all these different mechanisms, just to explain for maybe people who don't know, a will is a document that governs the distribution of your assets when you pass away, whereas powers of attorneys for property and personal care are documents that enable you to appoint someone else to make decisions on your behalf about your finances and health during your lifetime, but while you're incapable of doing so. Okay, so who should create an estate plan? Who can prepare an estate plan? Are there any age limits? These are questions that I'm asked all the time in my practice. So the answer to the first question, who should prepare an estate plan, is everybody. Everyone should have an estate plan. And I'm not just saying that because I'm a lawyer, I'm saying that because it's very important to have wills and powers of attorney in place. In Ontario, in order to create a will, so this is who can create an estate plan, you have to be of sound mind, meaning you have to be legally capable in the eyes of the law. You have to be 18 years or older, and you must be making the will for yourself. You can't make a will for somebody else. I should note, though, that there's a few exceptions to the 18 year of age requirement, being if you're married, if you have children, or if you're a member of the armed forces, which makes sense if you think about it, because if you have a child, for instance, or you join the armed forces when you're 17, you want to be sure that you're able to prepare a will and powers of attorney in the event that something happens to you. So why do you need an estate plan? Why is it so important? Well, first and foremost, having an estate plan provides you with the flexibility to choose who your assets go to when you pass away. If you don't have a will or an estate plan, you'll die intestate, meaning you die without a will. And your estate will be distributed in accordance with the laws of the Succession Law Reform Act in Ontario. And depending on who your surviving family members are at that time, someone you don't intend to receive your estate could in fact become entitled to your estate if you don't have a will. Administering an intestate estate, so an estate without a will, is also far more costly and more complicated than administering an estate with a will. So by having a will in place, you avoid these increased costs and complexity later on. Having a will and an estate plan also provides you with peace of mind, knowing that your loved ones are taken care of. You're able to protect and provide for your dependents, whether that be your spouse, your children, your parents, and so forth. You're also able to appoint a temporary guardian for minor children in your will, and you're able to probate plan, meaning you're able to implement ways to minimize probate tax on death, which is what we're going to talk about in the next couple of slides.
Okay, so probate saving is a topic that comes up frequently in the estate planning and estate administration context, something I talk about every single day. So to ease our way into things, let's begin with a brief introduction on what is a probate tax. What is probate tax?
Okay, so probate fees are essentially tax on estate assets. They are separate and distinct from capital gains tax. Probate tax is paid to the Government of Ontario, Ministry of Finance, when you apply, or when your estate trustee rather applies for a probate certificate, which is now referred to as a certificate of appointment of estate trustee. Put simply, probate tax is essentially 1.5% of the value of your date of death assets after the first $50,000 of your estate. So it's calculated at the rate of $15 per $1,000 on every $1,000 after the first $50,000, which is not subject to probate. So to give you an example, make it a little bit clearer, if your estate is valued at $1 million, the probate tax payable on $950,000 taking away that first $50,000, would be $14,250 in probate tax, which is payable to the Ministry of Finance when you pass away. And again, separate from capital gains tax. Probate tax is applicable to worldwide assets held personally, so excluding real property located outside of Ontario. So if you have bank accounts in Greece, Italy, or Spain, you can tell I really want to go to Europe. All of these are included in the calculation of probate tax in Ontario. But if you own real estate in Greece, Italy, or Spain, those do not form part of the probate calculation in Ontario. There's some other exclusions as well. So probate tax is not calculated on assets that are said to pass outside of your estate. These types of assets include jointly held property, assets with designated beneficiaries, so your registered plans, your RRSPs, your TFSAs, your RIFs, and life insurance policies with designated beneficiaries, of course. Many people actually approach their estate plan with the goal of minimizing probate tax where they can, and we're going to get into some of the key ways that people can minimize probate tax now. So converting assets, whether it be real property or bank accounts, into joint ownership where appropriate. This is one of the most common ways that people engage in probate planning, sometimes without even realizing they're doing it. Converting assets into joint ownership is usually done. It usually arises between spouses and common law partners, though it doesn't necessarily have to be. For the purposes of this discussion today, I'm going to refer to spouses because it's the most straightforward example. There are two ways that people can hold real property, or two most common ways, I should say, that people hold real property are jointly and as tenants in common. When you hold a property as tenants in common, each spouse owns an undivided interest in the real property that they can dispose of as they wish, right? It could be 50% each, it doesn't have to be. The other way to hold real property is jointly, or joint tenants with right of survivorship. So the important thing about holding property as joint tenants is that you're able to save probate tax on the death of the first spouse. So the reason for this is because at law, the property is deemed to have automatically vested, transferred, if you will, to the surviving spouse immediately before the death of the first spouse. So the value of the real property, if it's held jointly with right of survivorship, doesn't actually form part of the estate of the deceased spouse, because at law, immediately before that person passes away, it's deemed to transfer to the surviving spouse. So you save probate tax on the death of the first spouse by holding property in that manner. And you can set up and structure your bank accounts in the same way, your investment accounts as well. Okay. So I noted earlier that I used spouse as an example here because there are many implications of owning property jointly. If you're considering adding anyone other than your spouse, there's different rules, different presumptions that apply at law, and there's additional steps that need to be undertaken in most cases to give effect to your intention. So if you're considering adding an adult child, for instance, that's a huge flag for me. You definitely want to speak to a lawyer because there's additional steps that you need to document in order to clearly implement your intention later on.
Okay, so another way that you can save on that probate hit is by naming beneficiaries where possible. Accounts like your TFSA, your RSP, your RIF allow you to make specific designations in those accounts that allow the funds to go directly to the named beneficiary on your death without actually forming a part of your estate, therefore bypassing the need to pay that 1.5% probate on those accounts. Life insurance, very similar. They have the same designation abilities. One thing you should be cognizant of when making those designations is if you are intending that to go to your minor child. In that event, it would be beneficial to speak to a lawyer where you can help set up a life insurance trust or a registered plan trust. The bank forms are not as flexible, so by making those trusts, you are giving the beneficiary access to the funds earlier while not being able to access the entirety of the funds while they're still a minor. So the next one, this is a little more complicated, but it is another way to minimize your probate payment. So inter vivos gifting, this is Latin for making gifts during your lifetime. By gifting while you're alive, you're essentially minimizing the total value of the estate, meaning there will be less probate tax payable on your death. So many individuals who have the funds to provide for their beneficiaries in this way opt for this. Canada does not have tax on gifts at the moment. So it's important to note that there are a lot of potential cons to this approach. First being that statistically speaking, you are expected to spend the most amount of money in the last couple of years of your life, given the increased cost of healthcare in those years. So you have to make sure that you have enough money to fund yourself. Secondly, if you're not classifying your gift in the correct way, it can be misconstrued on death. Be sure to distinguish whether the gift to your child is a gift or a loan. They're documented differently and they're treated differently on death. The last potential issue with this type of saving is if you have 2 or more children and you end up paying one child more than the other, there may be some resentment because of unfair or unequal treatment. And this is probably the most common way that we deal with things, multiple wills, which we'll get to on the last slide. And again, trust, another way, which we won't get into, but if you need further explanation or you're considering this, please reach out. Okay, so multiple wills. Is this right for you? Sometimes they go by the terms primary and secondary or private and public wills. They've been in Ontario since 1998 when they received judicial approval in the case of Granovsky Estate. It was a landmark case in Ontario for estate lawyers, so that's why I'm mentioning it. By using the primary and secondary wills, you are able to carve out certain assets from probate, meaning you're skipping that probate tax. So a primary will, which is the public will, governs assets requiring probate on death, including bank accounts, certain real property. And secondary wills, also known as the private wills, cover those not requiring probate on death, including shares held in privately held corporations or unsecured debt. So by using these 2 wills, you save on probate tax on the value of assets that fall within the secondary will. When thinking about what type of strategy is right for you, it's important to look at what assets you hold now, what assets you're likely to hold on death. Sorry, it's hard to multitask. Okay. Now that we've covered what it is, why you do it, we're going to deal with things to consider in the process.
Okay, so who should be your estate trustee, Katlynn?
Okay, so there are a couple rules that accompany who you can choose. Again, they have to be 18 or over or of the age of majority. They have to be mentally capable. Your estate trustee should be a Canadian resident. And if you have more than one estate trustee appointment, then a majority of them should be Canadian residents.
And are there any things to keep in mind when choosing your estate trustee?
You should choose somebody who is financially responsible, someone you trust. This person will have complete control over your assets. So it's best not to choose the guy from Wolf of Wall Street. You may choose as many estate trustees as you like. If you have 2 or more children and you think they are all equally responsible and trustworthy, there's no problem with appointing all of them.
Is there anything else to keep in mind when deciding how many estate trustees to appoint?
So if you are choosing more than one estate trustee, if you know they don't get along now, the likelihood that they're going to get along later is pretty low. If you insist that both or all of your children come on as your estate trustee, then you should consider having a tiebreaker or a veto power to prevent a stalemate. Potentially having a neutral third party is really not a bad option.
Are there any age limits that is for an estate trustee?
Well, there's no age limits other than the need for them to be over the age of majority, but be very mindful of the tasks and responsibility involved in this. Being an estate trustee is a long, arduous task with tons of liability. So appointing your aging grandmother may not be the best idea. Overall, you really should discuss your appointment with the person you intend to appoint.
So who actually wants to be an estate trustee? Hint, nobody.
We do, actually. Mills and Mills, along with many, many other trust companies. Most of the major banks have trust departments that offer this service. Many, many law firms, including, again, us, Mills and Mills, offer this service. And all of these considerations apply for who you appoint as your attorney.
Randy, sorry, Katlynn, to interrupt you. How are we for timing? Do we have about another minute? We have about a couple of slides to go. Good? Okay. Great.
Okay, I'll go quick. As noted previously, wills allow you to plan for your dependents and your incapable beneficiaries. I'm going to skip the guardianship provisions because Lauren mentioned it earlier. One of the big ones for a lot of people is the Henson Trust. So if you have a beneficiary who is eligible for ODSP, then this has been developed as a way to provide for relatives with those disabilities while also protecting their eligibility for government benefits. So it allows you to maximize benefits because it won't fall into that beneficiary's hands. A trustee does have to keep themselves apprised of the ODSP limits when dealing with this. Okay, so as mentioned earlier, you can be more flexible in distributing to minor children when setting it out in your will rather than on bank forms. There are a couple other planning provisions you can include in your wills: charitable gifts, cash gifts, personal property. Don't let your children fight over your old chairs. You would be surprised what people fight about after your death. Funeral arrangements, you have that option to put it in your will if you have anything specific in mind. If you have special assets, family cottages, anything that's unusual, pets, you can put that in your will. And does anybody have any questions for us?
That's fantastic, Lauren and Katlynn. Thank you so much for an amazing presentation. Yes, we can open it up to questions now. So if you do have a question, I muted all of you. You can unmute yourself and ask one at a time, please. And I know Lauren and Katlynn would be happy to answer. So feel free to ask a question.
I have a question.
Sure, go ahead, Kim.
So a couple of questions, actually. So you mentioned that the tax, we're specifically talking about Ontario, but do most of the other provinces kind of follow the same outline or close?
So in terms of probate tax, each of the provinces do have their own rate of probate tax. Ontario and BC are the highest. I don't unfortunately know the rates in other provinces, apart from the fact that Ontario and BC are the highest. But yes, each province essentially has their own form of probate tax, which is payable on death.
Okay. And you mentioned that, so the real estate portion is not taxable. Do I have that right?
Sorry, go ahead.
Well, no, so I'll give you a scenario. So my grandmother passed away about a year ago. And there's a bunch of mix-ups with some stuff to do with property she was 101. So there was stuff going on with an old will. But anyway, so when she has her adult children on the will, in her will, three of them. So in that particular case, would they pay probate tax on that real estate or no?
So I can't actually get into specific legal advice here on specific files, but I can answer your question about like real property. So real property that is located within Ontario is subject to probate tax, 1.5%. If the property forms part of the deceased person's estate. Real property located outside of Ontario, so Greece, Spain, or Italy, does not form part of the calculation of the deceased estate or probate tax. If a property is in the name of a deceased, so in the name of a grandfather, for instance, that property, the value of it will form part of the calculation of probate tax. If the property is not in the name of the grandfather or grandmother whoever it may be, it's in the name of sibling 1 or sibling 2, like on title, that property does not form part of the estate. If essentially, to, I guess, answer your question as well, without using specifics, again, if the property is in the name of the deceased, it forms part of their estate. It doesn't matter if in their will they say this property is to go to A, B, and C. Because it was in the name of the deceased when they passed away, it forms part of the calculation of probate tax.
Okay. And so based on the strategies that you were mentioning today, so, I mean, obviously you can't do anything about, you know, when you own a car and somebody's going to split that or whatever. But if you had bank accounts, you know, if you were an older person and you had an RRIF, any of that stuff, you said as long as you put a beneficiary on that, then you can avoid the probate tax. Did I get that right?
Yeah. So if you have any RIFs or RRSPs, there's different types of designations you can make for a RIF and a TFSA, which are outside the scope of our presentation. We did not cover, like a TFSA, for instance, you can name a successor holder if we're talking about your spouse or common law partner. RIF, you can name a successor annuitant if we're talking about your spouse or common law partner. But just generally, if I'm someone and I have an RRSP and I want to name my brother as my beneficiary of my RRSP, on my death, the proceeds automatically transfer to him. They do not form part of my estate because I have a designated beneficiary. So yes, exactly. Your understanding is correct.
Okay, great. Great information. Really good presentation.
Awesome. Thanks.
Peter has a question.
Sorry, thank you, Randy.
Yes, thank you. I have a question, and that is in regards to insurance policies. Some people I've heard have put the insurance policy in the will. And why would they do that? If they have named beneficiary, why would they put the will in the insurance policy in the will? And does that cause problems?
So different lawyers have different approaches to this. We typically do not at our firm include any designations for insurance policies in our wills. I know, Katlynn, you worked at another firm in the past where they did do designations in the wills for insurance policies. So if you have something to add after, feel free. We don't do that because there's this potential for confusion. There's potential for delay. So for instance, if you designate a beneficiary in your will, you could say, I designate my brother in my example as beneficiary of my life insurance policy A, B, and C. This is not to form, sorry, can we mute whoever's not muted? This is not to form part of my estate when I pass away. However, when you go to submit the will to probate, sometimes what would happen, and with life insurance, this shouldn't happen, but if it's included in the will itself, sometimes, and probably not likely with a life insurance policy, but with financial institutions for sure, sometimes they'll say, okay, wait, no, you need to get the certificate first because it's in the will. We're not going to release it yet, right? So there could be a bit of a delay. And beyond that, it's just really not our practice to do that. Katlynn, do you have any other sort of insight into why did you at the prior firm?
Well, we did it in the will just because it kept everything together. We found a lot of times people would lose their original documents constantly. I actually do like the practice of keeping it separate now that I'm here. And I would recommend doing it completely separate outside of the will. Now,
I think the other point that is also confidentiality. I mean, if they want to get some funds to certain people in the family, that if it goes into the will, now it becomes public knowledge, right? So now they can't. So there's, that's what I always advise, to try and keep the insurance policy out of the will. And I just wanted to get a clarification on that.
Yeah, I mean, that's exactly right too. So anything that's included in the will, once it's filed with the court, is deemed to be a public document, right? Anybody can actually access that. Residual beneficiaries as well. So beneficiaries of the residue of the estate will actually receive a complete copy of the will as well when they're served with the application materials. So Peter, you're completely correct in that confidentiality is another big concern when dealing with those types of designations and even any other gifts that you're including in the will, right? Something to be mindful of.
Thank you.
No problem. I think, Ched, you have a question?
Okay, I have a question. Sorry. Like if you have my mother passed away, and the lawyer called. The legal way is not supposed to give to each one of them a copy of us who is on the will.
So the practice, well, I guess it depends on lawyer to lawyer. Like some lawyers like to give out the entire will. You have to notify the beneficiaries named in the will. It depends on the kind of legacy that's set out. So if it's a cash legacy, they are essentially only entitled to that one cash legacy. If they're part of the residue, they can really get the whole will. But again, as we mentioned earlier, once you file for probate, it does become subject to public knowledge. So you can go to the court and ask for the copy of the will if you wanted to. I personally don't know anybody who would do that though, unless they were very nosy. So.
No, because I got a call from the lawyer saying about it, but it took, my brother is a executor, and it took a long time for me and my sister to get the will, and I don't know if it was any transaction in between the lawyer what he said and then, because that's what I want to see. Okay. I think the lawyer is supposed to give the copy for each one of us. I got a copy, but it doesn't show the stamp.
Okay, so you do have rights as a beneficiary that might be a little outside of the scope of our presentation today. If you do have any questions specifically in that regard, I really recommend you get a lawyer to give you advice on that.
Okay, no problem. Thank you.
Ched?
Ched, yes.
Great, thank you.
I think you're on mute.
Okay, I'm back. So three questions. In terms of if it's a principal resident, that is still that if the person passed away, that principal resident is still part of has to still go through probate, right?
Generally, the principal residence is, unless obviously joint ownership.
Yeah, of course. Second question here is in terms of executor. You're right. Nobody wants to be an executor. But I have a client who doesn't have anybody he trusts. So what can you, or I think you can, or what the person should do?
So we briefly went over it. It was a little jokey. We do a lot of estate trustee work where we're named. We really like it. Mm-hmm. We have the support. Usually if you're just one person, it is really, really hard. I've seen a lot of people just had complete meltdowns over this position. It's super stressful. So you really do need that support. Like we have clerks, we have assistants, we have other lawyers who can take over some of the kind of grunt work of it. But yeah.
Well, I'm pretty sure. Well, I think that's part of your business. Is to do that. So that's why you're okay with it. But I'm just curious. Like, well, maybe I should take this offline. Is how much is it? What's involved in this? Is that we need to take it offline, or you can tell me right now?
Lauren, do you want to cover that one, or you're on mute?
Yeah, we can't read lips.
Sorry, can you repeat that question? My layout of my Zoom is a bit different, and I'm just trying to sort it again.
He's asking about fees for estate trustee compensation.
That's something we should take offline. I'd be happy to connect with you, Ched.
Sure.
Later today, because we have fee agreements that they're based on values of the estate, but that's not a quick answer. So we can certainly chat about that offline.
Okay. Messaging
and
you.
maybe just send put your email in the chat if you don't mind, and then I'll send you a note.
Okay, next.
Like, who is it?
Lisa?
Yes. Actually, my question was the same about the fees for your trustee services. And also, do you guys ever deal with segregated funds? Because even if segregated funds are unregistered, they can also have a beneficiary, so they bypass probate.
So those don't actually, they haven't come up often in my practice, but yes, there are certain segregated funds. I believe it's typically through insurance companies where you still can designate beneficiaries. In that case, we would be asking the client who had the segregated fund to forward us the particular bank form that we'd have to review, because in my practice, that hasn't really come up very frequently. So I can't really comment more on that. I'd have to look at the particular form and consider the situation.
I see. Okay, thank you.
No problem.
I'm an insurance agent. Can I add to this?
Sure, go ahead. You'd be the perfect person to add to it.
Yeah. So with segregated fund, if you have a named beneficiary, it goes directly to the beneficiary. As long as it's like almost like RSP where you name a beneficiary, and then all you do is present the death certificate to the insurance company. It'll pay out like within like 2 to 3 days, if you have everything all online together.
Yeah, for sure. I think with the form, I was coming more from a perspective in terms of drafting the plan trusts in our wills. Like we do draft for registered retirement savings plans, TFSAs, those type of registered accounts, but haven't yet had the opportunity to consider drafting for a segregated fund in the will. But certainly, yeah, the same principle, I guess, would apply in terms of designating the beneficiaries.
Yeah, same thing. I have both cases where a person died.
Great, Chad. Maybe I'll pick your brain on this after when we connect. We'll chat more about that.
I have a question. You mentioned that if there is not a will, it's going to fall into the provincial regulations. I just wanted to ask you how disadvantageous it is to let that happen, and if there's a certain net worth that is less impactful than others. For example, people with not such high net worth wouldn't really experience a lot of disadvantages as opposed to higher net worth. Could you let me know about that?
Okay, so the order for intestacy is basically spouse and children. There's some special rules there. And then if you don't have spouse and children, then it goes to, I think, parents and then siblings and then nieces and nephews. And then down the line. And then if you have absolutely no relatives, and this is a very unlikely situation, then it would go to the Crown, which essentially is the government. So if you don't want your estate to go to any of those people, and it doesn't even matter what amount of money you have, your net worth, if you don't want it to go to those people, and you don't want the extra filings, the extra affidavits, forms, the extra legal work, and the additional runaround for your beneficiaries, then you should get a will. There are multiple options for wills. Or there's also the option of a holograph will, which I would recommend if you have absolutely no money. That is a great option.
So in terms of whether there's any financial threshold, it's not really a consideration of financial threshold. It's just who you want to. I mean, financial considerations do come into play, of course, right? If you have $1,000 in your estate, right? Like, do you want to spend $2,000 to prepare a will? You know, most people I would wager would say no, it's not worth it. But if you have like a really bad relationship with your parents and you have no spouse, no children, and you really, really don't want your children or your parents rather to receive your estate, even if it's worth $1,000, that person might want to prepare, like Katlynn said, a holograph will. Very inexpensive and just ensuring that your parents don't get your assets under the rules of intestacy in Ontario Succession Law Reform Act.
Okay, from my point of view, it's not really for the sake of the expense of making the will that I'm making, but as just like dealing with the process itself. Another question I have is, if the will is signed by 2 witnesses and confirmed by a notary, does it still considered legal? So if it's not done through like a will, a lawyer.
If it meets the requirements for due compliance, it doesn't have to be prepared by a lawyer. That doesn't invalidate the will.
Okay.
So I don't want to get into like specific questions about specific legal advice. Just I want to keep it sort of within the presentation, because I'm not allowed to give legal advice unless I'm retained. But if it meets with the requirements of due compliance, a will does not need to be prepared by a lawyer. Okay, thank you. No problem. And again, if you want to chat offline, like more in-depthly and have a free initial consult, we're happy to do that. I don't want to do that for the purposes of the recorded presentation.
Perfect. I think I will get in touch with you because there's lots of questions that popping up in my head.
Sure. Happy to. I don't know if my email's in the chat, but maybe we'll put Katlynn, yours and my email in the chat, or it should be on the presentation, but I'll put it in the chat anyways.
And for those that email me requesting the chat and the recording, I will send it to you. Please do not put that in the chat because I won't see it and I won't go looking for it. So just send me an email. And thank you to the couple who have already sent me an email. Any other questions for Lauren and Katlynn? Paul, you can unmute yourself. Anyone else while we're waiting for Paul to unmute?
Yeah, I have another question, Randy.
Sure.
So Lauren, and this isn't specific, but maybe it's outside of the scope of the presentation as well. So I'm a mortgage agent and I deal a lot in the real estate investor space. So lots of clients who are forming corporations or holdcos to buy real estate within those. And so how does that work from a will perspective?
So this is something, yeah, definitely outside the scope. We can certainly, again, we can have a consult about that after. We can talk about secondary wills because shares in corporations do form part of secondary estates. So if, if a property is held by a company, whether it be a holdco, depending on how it's held, that property would form part of the secondary estate. But yeah, if you want to chat more about that, for sure, we can have a one-on-one meeting and talk more about that as well.
It would just be great to be able to advise. I'm sure that some people don't know the legal aspect of that. So it's great to know it and be able to make it part of, my presentation and then forward on business to you, right?
Yeah, we can definitely have a one-on-one or a two-on-one with Katlynn and I and you, and we can give you a sort of spiel, and we can even, give you some language like, our basket clause, and when we tell clients what forms part of your primary and secondary, the benefits of having a secondary in certain instances in these types of situations specifically, because that's, again, a way to minimize probate tax, right? Which is, when you're talking about $1 million, $2 million, $3 million and upwards, it's not an insignificant amount, as you saw.
Right, exactly. Yeah, thank you.
No problem.
Paul, go ahead. Thank you, Kim.
Good morning, everyone. I wrote several books, and I'd like to leave one book to a friend of mine with my Israeli names. Can I do that? Without without the family being pissed off. So works for it. That's my long question.
Sorry, I wasn't sure of the question. Can you repeat that maybe?
Okay.
Maybe you can type. Maybe you can type on the chat. Would that be better?
That might be
Yeah.
an idea.
I wrote a number of books, and let's leave one book to a known family, a friend of mine. So she or he pick up royalties. I don't know what happened there. The family might get really upset. Can I do that?
Paul, why don't you type your question in the chat for us?
Okay.
Can you do that?
Yeah.
Okay, thank you. Thank you. And we'll do the intros shortly. But anyone else have questions for Katlynn and Lauren?
Sorry, Chad.
Do you have one?
Mm-hmm. Yes. In terms of estate matter for people who have businesses, so, and that if he wants to pass it down, the business down, and this is a big question, down to his children. He had 3 children. What are the different options that are available?
So the number one, I think, would be multiple wills. This is always the top consideration for business owners, especially if they have a privately held corporation. If there's any kind of tax implications, if they're an accountant or a professional corporation or something like that, we have a tax lawyer in our firm who we always get involved in these types of files because there's so many tax implications to consider. So that's honestly the number one thing that I can say in that regard.
So you said multiple wills, I guess, for each of the children, I guess. That's what you mean by
for each of the, sorry. Are you talking about the business owner or the person sending it down?
The business owner has three sons. And so he wanted to pass, I'm not sure exactly what he wanted to do, how to pass it down. So I just want to see on what are the available options that the person can do.
For the beneficiary, like the children or him?
Him to give the money, the business down. Either he sells it off or maybe split it up. I'm not sure. And so I'm just someone to hear from you. What are the options?
Oh, okay. That's a really tough question without having all the facts behind it.
Yeah.
But estate-wise, you could either have, is he the sole? Well, this is really getting technical.
Yeah, outside. No,
I would keep that one off.
Yeah,
offline,
I agree.
And we again, Chad, we'd be happy to have like a one-on-one with you or a 2-on-1 with you to talk more in depth about some of your other questions.
Great. Thank you so much. Thank you, ladies, for an amazing presentation. Clearly, it was a topic that was quite popular for everybody. So I'm glad to see that. And thank you, everybody, for joining us and participating in it. So